All right, I believe we are all started on YouTube as well. So welcome everybody. Today is October 20th, 2025. This is the Bookmap stream, and my name is Spencer Riegle. So I am the Chief Crypto Options Trader and Strategist at DARMA Capital Trading. And so each week we hop on and we talk markets, and predominantly we talk Bitcoin and Ethereum markets, because those are the markets that we are actively involved in. But we also talk a little bit about macro, so what's kind of going on in the markets. We take a top-down approach to markets, and then we get granular, and then we look at kind of the week outlook, and then we look even deeper into the microstructure and the liquidity that Bookmap offers. So without further ado, you can follow me or reach out to me at _RIEGLE or at us, which is at DARMA Cap Trading on X, or I'm fairly active on LinkedIn at just my full name, and so I'll get those messages as soon as I can. Or you can reach out and have communication and conversations with us here in the Bookmap Discord. So all of those venues are fine, and they both work, or all of them work. So feel free to reach out if you enjoy the stream. So without further ado, let's kind of get into disclosures. And before I do that, okay, so all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each week we start off with a disclosure, but we also start off talking about risk, right? And so our job when we step on the desk every single time is all about risk mitigation for the reward. And so we always try to keep risk in the forefront and focus on the facts of the market, right? And so when what we like to call it is trading with risk capital, right? And what's risk capital? We deem risk capital to be capital in which you're willing to lose, right? And so if that capital that you're trading with you need for bills at the end of the month, you need them for groceries at the end of the week, or just a better quality of life. Maybe you want to go catch a concert or go to the movies on the weekend, and you're using that capital to trade with. That is not what we see as risk capital. And so a couple different reasons for that. And the primary reason is if you're focused on how much money you're going to lose, or how much money you're going to gain, you're not focusing on the facts of the market. You're not focusing on the pure risk reward, right? And so what we like to do is analyze where the best opportunities are for that risk in the markets, right? Knowing the trading game is a game of probabilities. It's a game of risk, right? And so there is inherent losers, always. And so if one loser is going to throw off your weekend plans or your end of the month bills, that's not risk capital. And that capital is better allocated towards those avenues. So let's break it down for those that are new. We always start off kind of with an agenda, and we take a top-down approach, right? And so we talk a bit about the macro, then we dive into the weekly, and then we get into a bit of a strategy talking as we think about the next 5 days. And so specifically, we actually didn't hop on last week. I was off the desk last week at this time, so we have a lot to catch up on. And one of those is, Stephen, I know you're on the stream, but you asked a couple weeks ago about that left tail, right? Those crashes being as violent. And we notated that we didn't really know. And there was speculation that it was still possible, but the idea was that they would be absorbed a bit faster, knowing that you have those treasury companies coming in the form and buying up that spot market, right? And they're taking that inventory off the market. However, no longer than 5 days, we saw a massive liquidation all the way down to 3,400 ETH. And this was about a week ago now, a little over a week ago now. And then we quickly rebounded, right? And what we found after the fallout of kind of all of that was it was a perfect storm. And what does that mean? Friday afternoon, 2 weeks ago, the Trump administration came out and started to threaten China once again. And as China was escalating their trade negotiations by sectoring off and pressing their leverage within the precious metals, right? And so the United States took that as an escalation and then threatened back, and then we saw a full-scale escalation, right? And then we got confirmation of 100% increase in tariffs, right? And just that general rhetoric is enough to put the market into a risk-off scenario, right? Because, one, the market doesn't know how far those talks are going to go. Two, the market doesn't know how high it's going to escalate. These are all things in which traders have to speculate on and infer. But markets were already priced at an all-time high, right? And there was limited downside priced in. We were almost priced to perfection on the top side. So it was a bit of a shaking of the tree, right? And into the Friday. And then what happened with crypto was there wound up being an attack within Binance ecosystem that created a repricing of their margined assets that they had on a particular asset, which created a lot of supply that came to market, right? And what that did was that liquidated the whole market, and we saw one of the largest liquidation events in crypto that we've seen, right? And so nearly 19 billion was wiped off in that liquidation event. And it was incredibly volatile. I was here the whole time on the desk, and the bids just evaporated, right? We went from the close on Friday, the cash New York close, right? The equities close, right around 4 p.m. Eastern, we were pricing in around a 38.50 bid, and then bids just evaporated, and we were skipping 100 points every second at that particular point until we bottomed out. We wiped all of that bad debt out of the system at 3,400, and then we quickly rebounded. At that particular point in time, markets kind of repriced, right? We found the bid right back at 3,800, but obviously it was an incredibly volatile time. Markets were repricing. Liquidity was incredibly thin. The amount of volume that was actually trading at that particular time, it was hard to get any liquidity. So obviously that was the largest macro event that had happened. And then since then, we've seen some backing down in terms of the escalations in the trade talks, and then a re-engage of the bid in risk assets broadly. U.S. equities are almost near an all-time high in the futures market after today's session. So we'll see if we can get that in the overnight. But and then in crypto especially, we've seen a lack of interest to really re-engage on the buy side, but we've seen some stabilization, right? And so a lot of interesting things that are going on underneath the hood, which we will get to talk a little bit about today. But volatility market, the options market, is incredibly interesting. Bitcoin vol was for a very long time, especially in a short-dated volatility market, right? The D-vol futures in terms of Bitcoin were sub 40 for a majority of this year. And it's been incredibly quiet. And so we've seen some repricing in Bitcoin vol. We're up about 10 points after the event, and we maintained fairly firm. And then Ethereum as well. So Ethereum was priced around a 62, 63 pre-event, and has quickly repriced all the way to a 73. So it's created a lot of, outside of just price, volatility has been incredibly volatile. Skew has been shifting around a lot. There's been a lot of flows that have been hitting that are just interesting generally to look at. So what does that mean in terms of risk? It's at a higher level, right? And so as we approach this week, the understanding is that because volatility is back, the margin for error is shorter and smaller, right? And so volatility in markets is great for traders, as using some of the things that we're going to talk about today to leverage optimal areas to enter the market. But inversely, it's a double-edged sword. So if you're not approaching it properly, or you feel as if you are on tilt or out of flow, it's better just to generally size down. So let's dive into, let me actually get rid of some of the spot markets here, and we'll just take a look at the perp markets, but we'll dive into the weekly update. So for those that don't know, we start each session off talking about our website. So everything about us, if you enjoy the call, you can head over to DARMAcapital.trade. And we offer a lot of things for free, right? So everything from about us, advisory, analytics, academy, and then our sign up page. And so what I always like to talk about is everybody really enjoys free stuff. And so while you'll see all of our analytics subscriptions here, we do have a substantial free library as well for everybody to check out. So I do suggest, if you're interested in doing something but not looking to engage at the full price tag, do something for free. And so what we offer for free is trader assessment. It's a gauge, right? So it's a behavioral study of yourself. And what it helps us understand and it helps you understand is who you are as a trader. So we break it down into 3 categories as traders, basically. And it's really good and eye-opening to see for yourself, right? And so, for instance, environment really matters for particular traders. And so if you're trading in a bland room or you're in a cubicle, sometimes that's not the optimal environment, right? And so those are some cool insights to get from the trader assessment test. The next is our education. All of our education at this current point in time is free. So I would recommend hopping over there and checking it out. I will actually show you what it looks like. So there is a ton of modules here. So three larger umbrellas, but within them there's a lot of modules, quizzes, etc. that you can kind of dive into to go over everything that we're going to talk about now. So make sure to check those out as well. They're all free and they're super helpful. So without further ado, let's kind of dive into things. So let's go over to here, and let me make sure that, let's bring up some live charts as well. All right, so what we like to talk about and what we do every single week, and I'm going to bring this over here so we can see a bit of both, is on the left you'll notice a bunch of different lines. What those lines are is our proprietary data and analytics, right? And so what we call it is the price map. You'll notice that there's multiple different durations up here in which we support, and we actually do support even further durations as well. But what we talk about every time we hop on is, first, we take a look at the market. Where is that directional level, right? And the directional we see to be a very classic pivot in the market, right? So it gives us our first take at, is price positive or is it negative, right? That's super helpful because if you're shorting a positive market and the market goes up, it'd be great to see that right in front of your face, right? And so these are small tells and facts that we use every single week to understand and better assume risk and also reward, right? The next that we always look at is the R level, right? And so this week's actually interesting because we do have some R levels that are above the market. And so typically we've been in a bull trend and we've been continuously higher for a majority of this year, majority of the second half of the year, apologies. And so we haven't had an opportunity to really talk about an R level that's over the market. So what we're looking at is a directional, right? So directional is 107,900. Over it in terms of price is positive. Under it, it's negative. The next is our R level. That's a dynamic level that we see every single duration, and it's going to change every single duration, that gives us insight on sentiment, right? So we have price that's positive. We have sentiment that's over the market, right? R level above the directional, that's a negative sentiment. And so it sets up for a super interesting market outlook, right? And so we're going to dive into it. On the right side here, this is what we call our playbook. we break everything down into market state. What is the state of the market? What is the expectation of the market to act in that state? And then 2, what's the structure? And then 3 is what's the strategy, right? So we try to keep it super simple. But the state here that you're looking at for Bitcoin is a neutral digestion. In this state, it is characterized by sideways trading conditions with limited profit potential. Opportunities exist on both sides of the market, but directional moves are not expected to be sustained. Avoid chasing momentum. Be patient and focus on execution at key structure points, employing effective risk management strategies that protect any unrealized gains. Transition indicators. This state can be a precursor to a potential breakout. As prolonged coiling action builds power, look for an early session trend move with no break in positive or negative structure as a tell to identify a possible breakout. A simple moving average can be an effective visual tool to identify an impending shift in state. If the shift in state is true, price action will maintain momentum into settlement phase, right? So, what does that mean? A couple different things, right? The state is in a neutral digestion. So the outlook is for failed breakouts, failed breakdowns, choppy digestive trade. However, we all know that digestive markets are the precursor to trend markets, right? And so how do you identify that? Is don't step into a positive trade or potential breakout early in the session, right? And we see our sessions to start on Saturday at 0 UTC and end at Saturday at 0 UTC, right? So we're about 2 days into it already, and we haven't really broke price structure, right? Every price low has been met with a higher low, right? Even this break here, we maintained the directional and we didn't break this low, right? And so continually we step higher and that's where we stand, right? And so a couple key things to notice for the next 24 hours. A break under the previous week's mid is your first tell, right? Where does that tee up for? Right back down to your previous week's high or previous year's high, and more so in your directional. That would be in alignment with your neutral digestive state, right? The next is, let's say we don't break, right? And we're priced and we hold the CR plus. Well, that brings us up to the structure, right? Let's talk about the structure next. So because the R is equal to the UP, right, which is this level, your R level is equal to your UP, gives the market a negative tone below this price point. Typically in this market structure bias, price is searching for its lower digestive extreme. Use caution. Difficult stop and go trading conditions are expected for any new negative price action. A rise above the R level is expected to produce a more definitive positive shift in opinion with good chance of producing a transition higher. The key to any transition signal will be the market's ability to maintain both price and market structure, right? So because this R level is above the market, immediately we are coming into this week with a negative sentiment tone. However, because price is over here and we haven't broke, this is our current situation. A rise above the R level is expected, right? So over 110, as long as we can continue to hold 110 and a half, basically, this market can take a stab at it. Where does it go? 113,500 is basically your level, right? So 113,631 to be exact. And that tees up for your strategy, right? Optimal strategy, a sell UP fade, right? And so your sell UP fade, because the UP is in alignment with your R, it's a strong signal, right? So if you get a price that goes to 113, our eyes are keeping a lookout to see if we can base over it. If we can't base over it and take a stab at the previous month's close, that's negative, right? That's more in that neutral digestion. And so the expectation would be to fade it with the outlook potentially right back at the directional for the week, right? So we look at everything kind of in a ladder, stair stepping, and the market needs to prove it every step of the way. And so let's talk about a hedge theme, right? And so a hedge theme basically means when this market is not performing to the expectation of the state or the strategy, or sorry, the state or the structure. When would we see that possible? Really, we need a base over the previous month's close, right? And if we get a base over 114 and we start to take out 114,600 and price continues to hold there, then that's in a hedge theme, and the expectation immediately is 120, right? All the way up to this UT1. And so that's kind of the outlook for Bitcoin for the week. Now, a break from here back to the directional is in a neutral digestion. Let's say we break even further, right? A buy DP reversal, which is a break under the DP down to 100 and a bid right back over the DP, is an optimal strategy for a neutral digestion. Where does that target? Right back to the mid again. So a couple different outlooks and things to look at when we're talking about this market this week. But most important figures over the next 24 hours. 110.75 needs to hold for this market to continue higher. The next is 113.5. And then under one, if we fail at the previous month's close, which is 114 basically, expectation is digestive choppy back down to the directional possible. Let's take a look at Bookmap, see where that alignment is on the right side. And we do have some resting liquidity that's interesting this week. So 112, we're taking a look at 112. We don't see alignment here, but you do have some resting liquidity there. And then 112,400, we see it more at 112,600. That's your previous month's mid. So basically the middle of trade last month. And then 113. So 113 to 114 we absolutely see. So these three bands here in terms of resting sellers, keep an eye out for those. This one right here at 112 is interesting. Obviously, it's always important to look at Bookmap and see where that resting liquidity is. If that seller just reloads, it is what it is, right? And that means that there's a seller in the market, and that precedes kind of this level here, right? So those are levels on the offer. On the bid, it's relatively light, but 109 is more or less where you see some of that resting liquidity down here showing up. And you can see it here right in alignment with the previous year's high. So that would put the neutral digestion back in play and performing to expectation if that bid supports. So that is Bitcoin. Let's jump over here to Ethereum, and then we can do the same sort of breakdown on Ethereum. All right. All right, here is the weekly for Ethereum. So, same sort of things. Neutral digestion. Oh, this one is actually a signature state. So this is a neutral digestion transition. So it's a bit different than a neutral digestion. So I'll read through it just so that we get some more clarity there as well. So this state has typically been in a neutral market state for at least 3 trading periods and is ready to make a decisive move out of its range trade. This is a pivotal trading period with the potential to be the start of a next significant advance or decline. This technical state can present difficult trading conditions with false signals in both directions common. The market is gearing up for a move and will either continue to narrow its recent trading range or bust out into a new trend. Opportunity exists on both sides of the market. However, aggressive risk management should be implemented. Reversal and breakout strategies are recommended. Successful breakout strategies under these conditions are typically one-shot opportunities using aggressive trail stops, right? So, again, where's the directional? 38.70. We've tested it a few times. The market is less trending than Bitcoin is, but again, we haven't broken structure. So the market tries to break down, newer high, lower low, newer high, same low, newer high, same low, right? And now we're making an advance again, right? Over the previous week's mid, just like we were talking about with Bitcoin, nothing to really be concerned about. And so this has the potential to re-engage the bid. And so where does it go? Let's take a look at the structure, right? And so with the R level being over the market, again, it creates this band of sellers potentially in the market over, right? So currently the market is poised for a decline, and the R level represents the make or break level for the current pattern. If the market builds a negative structure below here, it will start to circle the drain and should just release. If it is indeed going to break out, expectation is for a steady price deterioration. Any positive reversal signal is a sign that the trade will turn digestive. A violation of the UPR level is expected to provide a pop of energy with the potential to be the start of a new transition higher. Here to the rally should maintain positive structure, as any exhaustive negative reversal is a sign that the action is just an expansion of the current trading range parameters, right? So currently we don't have negative structure. So there's no reason to press the short side, right? Negative structure would be a break under the directional and continued lower lows and higher lows. And lower highs. So let's talk about the strategy. Strategy, sell R fade, right? So just like we were talking about with Bitcoin, base over the previous week's mid. Next step is we got to get over this 40-20 basically. If we can get over that, then we really have an opportunity to come take a stab at the previous year's high, all the way up to that R level, right? And you have a lot of resting important figures here: previous month's close, previous quarter's close, and then you have an R level. All of that is very important to note as you're approaching the market this week. If those levels cannot sustain a bid, that is the best area to take a short this week from what we see. So let me show Ethereum on the right side too. Okay, cool. And then beyond that, right, a buy our breakout, which means if we can get over all these levels, structure still maintains. This is not a market to fade, right? And part of the reason is we just talked about it in the state. It's in a neutral transition. And what does that mean? That just means that we are on the brink of transitioning into a new trend. And if that's the case, there's no need to fight it. Let that trend be your friend, basically. So over the R level, and you get a price over 4,200, immediately that ladders up the expectation to basically 4,500 for the end of the session. So don't look to fade it. Be very cautious if that does come to fruition. So that is Ethereum. Let me take a look here on Bookmap on the right side. So we have 4150 resting liquidity band there, which makes a lot of sense. We see absolute alignment there for all the reasons that we just talked about it. Next, 4300, which would be your previous month's mid. We do see some alignment there, but more importantly, due to the neutral transition, the expectation would be that that liquidity band does get taken out, right? If it doesn't, obviously, buyers and sellers in the market matter. Take that over just a level. However, that is what we were looking at for that 4,500 potential target. So that is Ethereum. That is Bitcoin for the week. We will open it up for questions, and then if there's no questions, then we'll hop off and we'll hop on next week. Okay, cool. Looks like no questions. Sounds good, Steven. I think the recording will be posted right after. It should be accessible, so feel free to watch it. And then if you have any questions, you can drop them in here. Awesome, great. Yeah. Everybody have a great week as well, and I'll catch you guys next week.